Hey guys, good afternoon, everybody. It is 2:01 p.m. Today is Tuesday, July 18th. Our scheduled mentoring sessions for 2 o'clock. So I'm gonna go ahead and set up this room real quick. And then we will get started shortly with our session for today. So if you guys have any questions, feel free to put them in the chat. And then we'll go over each question as they come in order. So it's a few things to update here. And we should be good to go. Let me get this link sent out to you guys here in the premium. Right. Link sent out. I'll give it a few moments for people to make their way in. Here. All right, so I'll get a few more moments for people to make their way in, guys. Good afternoon, everybody. It is Tuesday, July 18th, 2:03 p.m. right now. Scheduled mentoring sessions for 2 o'clock. So if you guys have any questions right now, feel free to put your questions in the chat. And we will cover whatever questions you guys have. So I don't really have many questions that are lined up for today. The main thing that I'm going to be reviewing is going to be the momentum pullback scalp, since that's pretty much the main thing we're applying. So I'll probably go over that strategy during the session, so show some examples, and then we'll go from there. So if there's anything specific that you guys want to cover, feel free to put whatever questions you guys have. And then we will continue on with the analysis for today. Sorry, guys, I'm just getting sidetracked right now with a couple of questions here that I'm getting on this side. But so it looks like people are still making their way. People are messaging right now that they're going to be in shortly. So looks like there's only a couple of people here. If there's any questions, feel free to put them in the chat now. Otherwise, main focus today will be the momentum pullback scalp. If there's anything that you guys are confused with, just let me know so we can clear up some confusion. But for the most part, the strategy is pretty simple. It's not very difficult at all. We can probably go over the entries that came up today, and then even some entries that came up after the live session. So market's closing right now, guys. So you're hearing my MC4 making that boing noise. It's just turning on. Market shifting right now from New York session to Asia. Well, technically it's going to be closed for like the next 2 hours, but yeah, it's shifting. So, all right, guys, I don't have any questions. So I'm going to start off with some examples of the momentum pullback scalp. I'll put up the criteria over here so that you guys can see. We typically start looking for entries after 7 o'clock. So we'll just start off with this right here, off this. I'll just rewind to this area right here. And then I will put up the criteria for the momentum pullback scalp. If I can find it. All right, there we go. So here are the criteria for the momentum pullback scalp strategy, guys. First, you want to identify the direction of momentum and trend on the 1 minute time frame. So in order to do that, there's a couple different things that you want to look at. For one, you want to look at the trend meter down below. Also, for the trend meter settings, you want to make sure that they're set to chart. So if you're scalping, we usually have it set to chart. If you're trading some other strategy, then you'll have it set to a different setting. But for the most part, it's set to chart so that you guys can see what the trend is looking like on the 1 minute time frame. So with that said, I have my criteria here set up all to chart, so I can see what the trend is looking like on the 1 minute time frame. So for the first step here, identify direction using momentum plus trend on the 1 minute time frame. First, you want to look at momentum, since that's the first part, right? In order to do that, you want to look back and see where the most recent momentum signal is pointing. So for example, here we have a buy signal, green buy signal. This is going to indicate that momentum is going upwards. So with that said, we can assume here that momentum is bullish, right? Next, you want to confirm the trend. There's a couple different ways to confirm the trend. One of them is to look at the trend meter down below. Trend meter down below here is green, so this indicates that the trend is bullish. If the trend meter down below is blue, that means that trend is indecisive with regard to the trend meter. And if it's red, that means that trend is bearish with regard to the trend meter. That's one way to identify the trend. You want to have as many confluences as possible. So you want to use the trend meter, and you also want to use the pivots here. One easy way to identify whether price is bullish or not is if price is above or below the pivot. So for example, over here, price is above the pivots. So this is going to confirm that price is bullish. So you can see over here, when price is going up, price is typically going to be above the pivots. Vice versa, if price is going down, you'll see that price is below the pivots, right? So pretty simple. Basically, price above the pivots, bullish, price below the pivots, bearish, price in between the pivots going sideways, price is neutral, right? So with that said, we've confirmed here that the trend meter is green. This indicates that the trend is currently bullish with regard to the trend meter. You can see that price here is above the pivots. That's going to confirm that price is also bullish. And the third thing that you can confirm is to see what direction the pivots are going. So for example, here, pivots are angling to the upside. So this is going to confirm that we have a bullish trend. Step one over here, identify direction of momentum and trend on the 1 minute time frame. You've already confirmed that, right? Because the momentum here is bullish, trend meter is bullish, pivots are bullish, everything indicates bullish. So with that said, we have a bullish direction. Once you've confirmed the direction, you want to move on to step two. You want to confirm that there's a push in that direction, right? So for example, over here, you can see that price is pushing in that direction, right? Because price is going upwards. So with that said, you have step two met already. Typically, when you look for step one, it's going to align with step two. So you're really just looking for that push from momentum. So for example, right here, we have a buy signal, and you can see from this point here, price pushes up, right? That's going to be the push in the direction of price. Once you confirm step two, you move on to step three, identify a pullback, right? A pullback will just be any opposite candle. So for example, price is pushing up right here. You have a red candle right there. That's going to be considered a pullback. Does it have to be a big pullback? Does it have to be a small pullback? Just a pullback. So once you have that pullback right there, you're going to enter at the nearest 10th mark. So basically 0, 0, 10, 20, 30, 40, 50, 60, 70, 80, 90, etc. Any of those whole numbers. So for example, right here, price pulled back to 34,990. So with that said, your entry, and if you guys remember this from the live session, this one was kind of hard to tell because this candle pulled back like right at the line. I mentioned that price was above the line, we'd enter right here. If price closed on the line, you'd enter right there as well. But if price closed below, you would enter at the next whole number, which would have been down here, right? So this is the 90 and this is the 80 right here. So with that said, there's two different opportunities for entry here. You could have entered right here at this specific price point. And if you did, that would have been the entry point right there as soon as the candle opened. Vice versa, you could have waited for price to pull back a little lower to the next level down here, right? There's two different opportunities for entry here, up here or down here. Doesn't matter which one you take. I think both of them did hit. It's just this one over here went into some drawdown before it eventually ended up hitting. So with that said, first, we're going to go back to step one. Step one, confirm and identify the direction of momentum and trend. Price is bullish right here, bullish momentum, bullish trend with the trend meter and pivots. Second, identify a push in that direction. Price pushed up since this momentum signal. Third, identify a pullback. So maybe I should, okay, I'm gonna update this requirement a little bit just so that you guys can see, or I'll make it a little more specific. Because if it just says push in that direction, then it's gonna be hard to actually, no, I'm gonna leave it as is. Sorry. I was gonna make it more specific and say push in that direction from momentum, but that's not going to be the case because if there's no entry here, the push can happen later on. It doesn't have to happen right after momentum. So sorry guys, I take that back, scratch that. I was going to change the requirement from momentum, but realistically, it just has to be a push in the direction. So we have a bullish direction here, price push in that direction. Third step, identify a pullback, which happens right here. Enter at the whole number, basically. The nearest whole number, which would be 0, 0, 10, 20, 30, 40, 50, 60, 70, 90, etc. It would typically be right here. So if you wanted to enter right here, this would be your entry point. You can see right here that the order filled and then it went straight to TP. So that's going to be an example of entry here. So identify direction, bullish, identify push in that direction, push to the upside, identify a pullback. This red candle right here is the pullback. Fourth, identify the nearest full number for entry. Full number is right there. TP set to 100 pips. Okay, this is where I got to make the adjustments. Stop loss is set to 250 or exit at opposite signal. So let me just save this again. I'll go over another example, guys. This isn't the only one. So that's one of the changes that we have to have right there. So there goes one example of an entry right there. As I mentioned during the live session, there's two ways to apply this. You can either take every single entry or you can take one per momentum. For me personally, I like taking one per momentum because I like having quality entries versus multiple entries. Quality over quantity, because obviously you can have a bunch of entries if you take a lot. But if you just take one per momentum, it pretty much balances out to about the same amount of profits because you're not going to have as many losses, if any losses at that. And typically this strategy is applied between 7 o'clock and 8 o'clock during our live sessions, but you can apply the strategy basically all throughout the New York session. So this is the first entry right here. I'm going to go over and take a look at the next one. Okay, so again, right here, we have another opportunity for entry. So let me go over here real quick and we'll see this retracement right here. So again, right here, we have price push away, right? So let me just start over and we'll just start from scratch so that you guys can see an example here from start to finish. So right here, first you want to identify the direction of, you want to identify the direction using momentum and trend on the 1 minute time frame. So again, we're looking at momentum right here. We have a buy signal that's going to indicate that price is bullish. Second, you want to identify the trend using the trend meter and the pivots. So with that said, let me just change this right here. So identify direction using momentum plus trend on 1 minute time frame using trend meter plus pivots. So I'm just going to I'm going to make these adjustments so that they're going to be as specific as possible. So that there's no confusion here. I mean, you can use other tools too if you want, but for the most part, I think this is pretty much what we'll be using. So, okay, I try to make it a little more specific. So step one, identify direction using momentum plus trend on 1 minute time frame using trend meter plus pivots. So right here we have momentum, it's bullish. Down below we have the trend meter, it's bullish. Right here you can see prices above the pivots and the pivots are angling up. So with that said, we have a bullish direction here. Once you confirm that, you want to confirm that there's a push in that direction. So for example, here you can see price is pushing upwards. That's going to be step two. Step three, you want to identify a pullback. So for example, here price is pushing up. This candle right here is pulling back. That's going to be step three. Step four, you want to enter at the nearest full number. So right here, you can see that price has pulled back to 35.11, your entry would happen right here at 35.10. That's where your entry point would be. So once this is lined up right there, your long position would happen right here. That's where your long position would happen to enter. So once you have that set up right there, you have your TP set up at 100 pips. You have your stop loss set to 250. There's two ways of exiting the trade. You're either going to exit at stop loss, or if you get a sell signal, you're going to exit at that sell signal to cut your losses short. So with that said, trade here is set up. Again, this is the second entry. The first entry happened over here. So typically I wouldn't have taken this entry, but I'm showing you an example of multiple entries per momentum. So with that said, this trade would have played out right there. The trade would have filled on this candle. You would have been in the position. Price swung back up right here, pushes up further and hits TP. So this right here would be an example of another entry right there. Would have hit TP here. If you got caught at the spread, say for example, you're trading on MT4, it wouldn't have filled, price would have pulled back a little bit, and then would have finished through right here. So there goes another example right there. If there's any questions as of now, guys, feel free to put your questions in the chat. Again, I don't have any specific questions for today, so we're just going to be covering basically examples of the strategy, and I'll show you a couple more entries that happen throughout the day. So there goes another example right there. Let's see if we could find one more. All right, we have one more right here. So again, identify direction, and let's just, I'll start off from the beginning. Or actually, let's just, you guys already know, I've reiterated myself twice already, so you guys already have an idea of what to look for. Identify direction, we have bullish momentum here, green trend meter, price above the pivots angling up. Obviously, price is going to the upside. Identify a push in that direction, price did push in that direction right here. Identify a pullback. This red candle right here is going to be the pullback. So this candle pulled back to 35,036. Your entry is going to be at the 30 mark. So you're just going back to the most recent whole number prior to where price closed at. So right there at the 30 mark, right? This is where your entry is going to be. You have that set up. You have your long position waiting right there. Basically just waiting for the trade to come down and fill your order. Trade fills your order right there. You're now in the position. Price pushes up further, blast straight to full TP. So at this point right here, we basically had about 3 back-to-back full TPs already. 1, 2, and initial one that was over here, 3. So super simple, not too difficult. That's pretty much it. That's what you guys would be looking for. Let's see if we can find another one over here. Let's just keep going forward. I'm looking for price retrace again. Okay, so again, right here, same thing, price pushes through. Again, I wouldn't take these entries. I would only take the first one. So the one that I would personally take that you see on the live session would just be this one up here. That's it. I wouldn't take these other ones, even though there's like 4 or 5 back-to-back wins right here. I wouldn't take these next ones because price is obviously overextended. So again, right here, you can see price retraces back. Price is pushing to the upside. Closest whole number to this is going to be the 70. So you'd actually enter on the specific candle close. So as soon as this candle closed, you'd enter right there. You enter at that point because price closed right on the price on that whole number. Enter the position there, full TP, another one. So about 1, 2, 3, 4, 5 back-to-back full TPs right here for this one strategy. So as you guys can see, you can take multiple entries per momentum signal, but I just take one typically. I usually just take one because I'd rather have quality over quantity. I'd rather have like 1 or 2 good trades, all wins, rather than having like 5 good trades and then like 1 or 2 losses. It just doesn't make sense to me because you're going to balance out to the same amount of profit anyways. So other than that, price is pushing up right here. We'll see if there's another opportunity. Price retraces right there. Whole number is going to be at the 80 mark. So again, right here, same thing. If you're continuing to take these entries on the same momentum signal, price comes down, doesn't fill, that's completely fine. Doesn't fill right there, so you're looking for another retracement. There's no entry at that point. Price pulls back again right there. Entry point would be the 20 mark. Same thing again right there. That's where your entry would be. right there, full TP again. So you have about like 1, 2, 3, 4, 5, about 6 or 7 back-to-back full TPs off just this one momentum signal. So as you guys can see, the strategy is very lucrative if you want to take every single entry. But for me personally, I just don't want to take that risk. I would just take one entry and I'll be happy with what I got from there. That's pretty much the entry that I took today. And that's how I locked in the profit. So I think, so we took a screenshot of that trade, which is right here, momentum pullback scalp. That's the same entry that I marked up right here, right? At 7:30, wherever it was, 7:35. Entry that happened right here. This is the same entry that we took during the live session. That's this entry right here. And that's where I made this profit. So I made 2,800 on my first account right here, or made 1,700 on a specific trade. Total profit 2,800. And then my F2 on number 2, 3,100, made 1,600 off that specific trade. And then my MFFs over here made 1,000, made 1,000, made 1,000. So that's what I mean about just taking one trade. I'd rather just take one trade, be solid with like, 1 or 2%. And then if another trade comes up, then great. If another trade doesn't come up, then I'm not going to force it. But there were about like 6 or 7 entries that came up right here. So other than that, let's see if there's another one that came up. Another retracement right there. Entry would happen right here, the 30 mark. No entry. Okay, so right there, another opportunity. We had the pullback right there. Long position right here. Trade would have filled right there, would have went straight to TP, would have filled it, and then went straight to TP right after. As you can see right there how it touched it like super quickly. So you have to be waiting for that entry there. So here's the case. If you guys didn't get your order filled right there, then you have to close your position for a loss right here. It wouldn't be a very big loss, it'd be an extremely small loss actually. So right there, you would have cut it out at about 2 points, which is 20 pips. If you didn't close out right here. But it does show that it would have hit TP before it would have gone to this point. So that's again why I don't like taking the multiple entries, because you don't know when the price is going to reverse on you. I mean, it didn't necessarily reverse, but I don't want to be caught in possible reversal. So again, right here, price continues to go sideways. You have another buy signal right here. See if there's any other examples here to show you guys. So we have a buy signal right here. You need price to push away. Price pushed away again right there. So here goes another example. So let's start off right here, and I'll show you guys a fresh example of the strategy, okay? So, all right, let's start off with the first criteria. So first, you want to identify, actually, I wouldn't have taken this. This is a bad example, because the thing is, price came down way below this point right here, where the momentum signal was, so I wouldn't have taken it. Typically, if I'm looking for an entry, I want to retrace to this point over here, not this far down. Because now, if you have this setup right here, your entry would be at, it's so far down, because this thing closed at 19, your entry would be at 10 right here. This is way too far down. At that point, price is probably going to reverse, or you'll get a sell signal. Price actually came through. I mean, but you wouldn't have filled your order either way, because this here closed right there, your entry would have been down here, which just would have never happened. So that would be the case right there, but let me show you an example over here. All right, price pulls back right here, your entry be at 40. Okay, so here's actually a better example. So let's start off over here. I'll show you guys. This is an entry that I would have taken, because there hasn't been one entry here for this momentum signal. And you can see here that it doesn't matter whether it's invalid or whether it's valid. So the signal doesn't matter whether it's valid or not. CJ's asking, would we also not take it because it was invalid? No. So the signal doesn't matter whether it's valid or not, because you're not taking entry off this candle right here, right? If you're taking entry off the candle, then yeah, it would make sense, because you're not going to take an invalid signal, but you're just using this as a confirmation. It doesn't matter if the signal is actually valid or invalid, because your entry is coming up like way after it. So even if it's invalid, and this is a perfect example, because even if it's invalid, you can see that price does fake out right here initially, but then it comes right back up to where it's supposed to go, right? So that's why it doesn't matter if it's valid or invalid. You typically just want price to be above where the momentum signal is. So you're not going to take any entries down here, but you'll take entries that are at the same level or that are above it. So, all right, let me show you guys an example here from start. So for the momentum pullback scalp strategy, first you want to identify the direction of momentum using the momentum indicator. So for example, right here, you can see we have a buy signal. We're looking for bullish momentum. Next, you want to confirm the trend on the 1 minute time frame using the trend meter and the pivots. Down below over here, you can see that the trend meter is green. This indicates that price is bullish with regard to the trend. And also you can see here that price is above the pivots with the pivots angling to the upside. So with that said, we have direction of momentum, which is bullish. We have direction of trend, which is also bullish. We're obviously looking for buys here. Second, you want to identify a push in that direction. So for example, here you can see these previous candles push to the upside. That's going to be step 2. We've identified a push in that direction. For step 3, you want to identify a pullback, right? So for that, you just want to make sure that you have an opposite candle. So price push to the upside right here. And this candle right here is going to be the pullback that we were looking for. So after you confirm step 3, you're going to enter at the nearest whole number. So this candle right here closed at 35,141. Your entry is going to be at 35,140. So with that said, you're going to have a pending buy position right here, a buy limit. You're going to set your TP to 100 pips, your stop loss to 250 pips, and then you're going to let that fill. You can see right here that the trade doesn't actually get filled. Waiting for it to pull back again. Right here's another opportunity. This right here didn't fill. So now that price is pulled back from this area, your entry is now going to be at the 50 mark because this candle right here closed at 159. So you're going to be getting in at 150, which is right here. See if it fills here. At this point, the candle would have filled. You're now in the position. Let the trade run. Go straight to full TP right there. So let's go back and take a look at that again. We already confirmed the direction. This candle over here didn't fill. Pushed up again right here, pull back. Next whole number is right here at the 50 mark. Your entry would have been right there. When price came down, it would have filled it. You would have been in the position, blasted right straight up to its full TP. So that's pretty much an example of the momentum pullback scalp. And this is one that I would actually take because there's no previous entry. I typically only take one per momentum. And this is the first one that came up. Anything that happens after this, I would just skip it for me personally, but you can keep taking them if you like. It's just up to your preference, how risky you want to be, and what trades you're going to take. Like, for example, if you needed to pass your challenge like tomorrow, not the case anymore because there's no minimum trading days. But for example, if you needed to pass your challenge by tomorrow, you can just stay on the charts literally all day from like 7 up until 12 or until 11, and then just keep applying the strategy until you pass your challenge, right? Because it's very possible to pass your challenge if necessary. If you just sat on the screen for like 6 hours and, basically be done with it. Because like, there's so many entries that come up, like from the testing that we've done, I think there's about like, if you're taking every single entry, there's over 20 entries that come up. So for example, if you're doing 20 entries, like for example, for each trade that I take, I make about a 2,000, right? So I'm doing 200 lot. So if I was to sit on the chart, like for 6 hours, which I personally wouldn't want to do because it's just so much screen time, right? If you're going to sit on the chart for that long. So, but I'm just going to do the math here for you. And let's just pull up, let's pull up the results over here that I did, right? Okay. So for example, I think I did a back test on like last week, whatever day that was. Okay, right here. So looking over here, these were the entries from July 11th. So all entries here, meaning every entry, like every entry after every momentum. So for example, right here, there was 13 wins and 5 losses. There was a total of 130 points in profit and a negative 600 and there was a positive 130 points, which is 1,300 pips. And then there was a 62-point loss, which is 620 pips. So with that said, it's going to be 680. And then if I'm doing a 200 lot, that's going to be times $20 per pip. That's 13,600. So I might have not been able to pass my challenge in one day, taking all the trades, but I would have been pretty close because you need 20,000 to pass, right? So basically 2 full days of trading, you would have gone to that point. This is including the losses. So if you didn't include losses, that's 1,300 pips times $20 per pip. That's 26,000. So if you were to basically not lose, that's how much you would have made. Looking down here, this is if you took a single entry per momentum. So with that said, if you just took one entry per momentum, it would have added up to about the same. You have 7 wins, which is 70 points or 700 pips. And then you have 1 loss for 8 points, which is 80 pips. So you have 620 pips times $20. You have 12,400. You probably would bring yourself back to break even if that's what you were trying to aim for. So a lot of opportunity right there with regard to, I mean, if you wanted to sit on the chart, I'm not going to sit on the chart for 6 hours. Maybe I'll do that at some point in the fall or the winter. I'll maybe like just set aside one day for me to just trade the entire day with you guys. But I'm not going to do that on the regular because this is just going to screw with your trade psychology. Like once you see how like lucrative this is, you're going to start to get greedy and you're going to want to do this every day. And then you're going to get sloppy, which is it's not ideal. It's better to lock in a couple trades per day, reset, come back the next day, do the same thing, and just have a consistent process with your trading. Because yeah, you can make a killer amount of money trading this, but the problem is how much can you take until you get burnt out, right? It's better to just stay consistent, trade for about an hour, 2 hours a day, and then just repeat the process daily versus, trading all day for like 1-2 days, and then you're like dead for like the rest of the week. So, I mean, that's just my 2 cents. I've been trading for a long time. I've traded before where I've traded all day, and it's not good for your health and it's not good for your trading long term. You might have a good couple days, but long term, it's going to take a toll on you and you're not going to want to trade anymore. So other than that, let's see. Randy's asking, when do you consider the trend overextended? I mean, I never really identify the trend as overextended, Randy. I identify movement as overextended, but not the trend. The trend could go on forever. Not forever, but basically forever. Like for example, today, the trend went on for the entire session, I think. Not exactly. So the trend was going for like about 6:30 up until 9. So about 3 hours. It was going. I don't ever consider the trend overextended. So I think you might. What you mean is, when do I consider price overextended? Because that's different. Price and trend is totally different. Trend can go on for a long time. Like for example, if you go on the 4-hour chart, the trend went up for how long? Like it started right here, right? The trend went on for about 26 days. So trend could keep going on like for a really long time, Randy. I think you're talking about price because they're totally different. Like for example, if you go on the daily time frame, like these go on for a really long time. So for example, right here, November 4th, 2020, it was bullish for about a whole year, 315 days. So the trend doesn't really stop. I mean, there's retracements, but the trend doesn't ever really stop. So there's no overextension of trend, there's overextension of price. Let's see, Randy's asking you use that blue thing. Which blue thing are you talking about, Randy? This blue thing is to identify date. So there's a tool here. There's a tool to identify date range, and there's a tool to identify price range. So if you're talking about price, well, it depends on like what time frame you're talking about too. If you're talking about the 1 minute time frame, then I typically, so I think you're talking about the price tool, Randy. Yeah, the price tool, it's the same thing as a date tool. So this is price tool and this is date tool. It's just date tool goes by date, price tool goes by price. That's called the measure tool. It's the same thing. The measure tool doesn't identify overextension. Overextension is based off like what you identify as overextension. So there's no tool that tells you, hey, price is overextended. It just depends on like what you're looking at. From my experience price is overextended when it's over about 1,000 pips. That's usually overextension for me. Of price, not trend, but of price. So I think that's the thing that you need to figure out, or you need to understand, is are you talking about trend, Randy, or are you talking about price? Randy, we're just going back and forth. Randy says, that's it. It's a ruler, that's it. So what are you talking about? Are you talking about price or are you talking about trend? I think that's where you need to make a decision. Are you talking, because this tool here doesn't mean anything. It's a ruler, right? If you want to measure price, great. If you want to measure time, great. It doesn't make a difference. It's just a ruler tool. It's called the measure tool. This tool doesn't do the actual work for you. You have to actually know what is overextended. Yeah, like Martha over here said, she uses it. She uses the 500 mark and the 1,000 mark. Okay, so you're talking about price. So if you're talking about price, like for example today, right? We were looking for overextension. So market opened right here, and let me just use a clean chart, or I'll just take some stuff off the chart. All right, so here's a low point, right? I typically identify price as overextended when it gets to the 1,000 mark, like 1,000 pips. So see right here, our price got past 1,000 pips with no retracement. So see how price pushed up like this, Randy? That's what I consider overextended with regard to price. Again, not trend, but that's what I consider overextension with regard to price. When price gets past this point right here, I'm expecting retracement. I expect that price needs to come down at some point. This is like way too far out. So you can see over here, price does finally retrace down a little bit, right? So price over here, you can see it pushes back up. Then I do the same thing. I just move it about a bit higher. So again, right there for this point, see how price pushes from that point up there, goes to the 1,000 mark. Again, here we are at the 1,000 mark, right? It's now overextended in my opinion. Price comes down, there goes a retracement. And then price pushes up again, right? Now it pushes up again. Now I'm looking for another overextension. Price again over here is at 1,000 pips. See how it comes back down? So when it gets to the 1,000 mark, that's typically where I start to identify retracement. It doesn't necessarily mean price is overextended, like for sure. It just means that, okay, price should pull back at this point. Doesn't mean it's going to reverse, but it should at least pull back to some extent. So again, right here, it got to the 1,000 mark. Price started to retrace down a little bit. It goes around, it just keeps going. Again, right here, again, same thing again. So see how price starts, it creates a new low, or you can just you can use a high-low indicator. So right here, price comes down, establishes a new low. Now we look again for the same thing, right? 1,000 pips. See again right here, Randy? It's at 1,000 pip mark. It's probably due for retracement. And you can see right here that it starts to retrace around this area. And it just keeps going up higher and higher and higher. But it doesn't necessarily mean price is going to reverse at this point. That's just kind of where I see price is likely to retrace back. And it also depends on volatility. So today market was volatile. I go for 1,000, right? Typically, if the market's not volatile, I'll go for like 750 or 500. It just depends. I use whole numbers, but it depends on the market conditions. Like market conditions are always going to be different. So, I mean, you can use whole numbers, Randy. You can use the 500, 750, 1,000. Market was volatile today, use 1,000. Market slow on, let's say, I don't know, Tuesday. Market was slow yesterday, right? So let's go over to yesterday. I mean, there wasn't really much direction yesterday, so you can't really identify it. Overextension. Let me, okay, so for example, right here, right? This was market open at 6:30. Let's again measure it. See how price got to that 1,000 mark? See where I'm at the 1,000 mark again? Look where the retracement happens. Right there, right? Again, here, price pushes up. Volatility kind of dies down a little bit. So at this point, there's no overextension because price just goes sideways. You can only really identify overextension when price is actually moving directional. Like for today was a good example, but the thing is price isn't always going to be pushing up like that. So, I mean, it's just used as a tool. Yeah, no problem, Randy. Sorry for the confusion because you said trend earlier, so that kind of threw me off. I was like, what is he talking about? I figured we were talking about price. But yeah, use 1,000 during volatile markets. I use 750 during somewhat volatile, and then during slow markets, I'll use 500. And that's pretty much how I measure it. And I use the price tool here. So yeah, you can use either tool. Like for example, you said the ruler tool. This is a measuring tool. The problem with this is, say, for example, I see where it's measured from, and I click, and say I click on something else, it's gone, right? I don't have anything there. If you use a price tool here and you do the same thing, if you click out of it, then it stays on there. So you probably want to use price tool. Use this one, not the measuring tool. Measuring tool is for short-term measurement because it deletes. But if you use the price tool, it stays on the chart. So you probably want to use a price tool when identifying that. Java Junes is asking, is it possible to trade this system profitably on MFF? I mean, made 1,000 on my MFF today. I made 450 on the other day. The day before that, I made 2,290. So yeah, I mean, the system works on MFF. I'm pretty sure it works fine. I mean, if you look back at anyone's profit, there's a lot. It's not just me. There's like other people here too. The day before that, I was at 1,000 on MFF. Day before that, or last week, I guess, 720. So if you look at my profits over here, Java, so I always post up the profits across all my accounts. My first two accounts here, these are FTMO. You can tell it's FTMO because it says .cash. Anything with .cash is FTMO. This is my FTMO right here, logged in 2,800. Here's my FTMO number 2, 3,100. And then you can see that MFF counts don't have a .cash after, it's just US 30. So my 3 accounts right here, here's all my accounts. You can see the screenshot of all my accounts. I have 2 FTMOs, 3 MFFs. I mean, it's profitable, but the thing is, like, it doesn't really matter what you're trading on, unless you're trading on TFF. So I take that back. If you're trading on TFF, probably not going to be profitable because you guys remember my TFF before. Let me see. Okay, so this was my account before when I was trading TFF. You can see my .cash with FTMO locked in 970, FTMO number 2, 770, MFF less profit 570, but then TFF locked in -100. So yeah, I can see your concern with that, but MFF is fine. So MFF and FTMO are typically the top. Those are the only 2 prop firms that I use personally. If you use E8 funding, they charge crazy amount of fees, so I can kind of see where your concern is. So you probably might not be able to make very much profit with them. And then TFF, I mean, good luck because if you look at all my trades here from TFF, I was always getting screwed. Like for example, here you can see I was making 860 on my FTMO. I made like 760 on my MFF, and then TFF gave me -300. Because the thing is, I think their spreads are super wide and their execution times suck. So I would be careful. I wouldn't use TFF for scalping. You can probably use it for intraday and stuff, but not for scalping. But yeah, MFF is fine. I mean, I've been using them. They give you less profits though. So for example, their execution times aren't good. So look, comparing my profits over here, sometimes they're okay, but a lot of times they're kind of off. So I use a bigger lot size on FTMO, so my profits are always going to be more, of course. But if you even take half of this, so for example, I made 1,100 on this account right here, 1,100 divided by 2. I made 550. I should have made 550. I made 450 on my MFF. So it was off by a little bit. Again, right here, here's my FTMO. I got a green strip, so it hit full TP, 1,700, right? So 1,700 divided by 2, I should have locked in 850. MFF only gave me 550. So you can be profitable, but you're probably not going to be as profitable as you would be on the FTMO. So I don't recommend MFF to anybody unless like you've already max allocated your FTMO. FTMO should be the first one that you guys do unless it's Top Step. So the only 2 prop firms that I recommend is FTMO if you want to use MT4, and if you want to trade directly on TradingView, use Top Step. So I use Top Step on TradingView, and then for my MT4, my main account is the FTMO. Everything else copies. So copies to my other FTMO, and then copies to my 3 MFFs. And yeah, I mean, it's possible to be profitable. It's just don't expect to get full profit because the execution times suck. And they only do that to protect themselves. I don't think MFF is looking to scam anybody. It's just that they need to have that execution time gap so that they're able to even out the playing field. Because these trades come up super fast. So, I mean, I'm not surprised that they would have to do that, especially for scalpers like us. All right, let's see. Other question over here is from Bloom or Paul. Let's see. Paul said, hey, Sean, and everyone else, have a technical question regarding the FTMO challenge. I went ahead and bought a second FTMO challenge when it was on sale without the time requirement. Still working on passing my original challenge, but wondering if I should prioritize the second challenge instead of the current one since it doesn't have a time requirement. Should I add on my third retry of challenge about a week in currently? Is it also worth copying trades to the second account at this point, or should I just work on passing challenge one first? So it's really up to preference, Paul. Like, I mean, it depends on like how confident you are with your trading. If you feel like you can pass it and you're like very confident, then I would just add the copier because it's just going to save time for you to pass both, right? Because it's going to take a long time if you have to do them both separately. So if you're confident, I would just toss it on the copier. I mean, there's no need to like really, unless you're not confident. If you're not confident, then I wouldn't do it because you don't want to blow both of the accounts, right? You want to just, if you're not confident yet and you still want to just, take it easy, then I would focus on the one with a time requirement because the other one you can just pretty much leave it alone and just take like one trade a week or something like that to keep it active. So depending on like how confident you are, I would, if you're very confident, add a copier, pass them both around the same time, so you don't have to like lag in between. It doesn't matter if it's lagging behind. Like for example, say you're going to pass the first one and your copier one is not done yet. That's fine. You can always switch between the accounts. Like say you pass the first one, and then usually they'll give you your verification credentials right away. So you'll just switch out the account and then you'll just keep trading. So if you're confident, take the put it on a copier. If you're not confident, focus on the one that has a time limit so you can pass that one first. And then do the other one, like once you're done with that first challenge, because the one without the time limit, you're pretty much cool with just waiting. You don't have to really do much with it. You're just going to like let it sit there until you're ready to trade it. But yeah, does that help, Paul? Because it's just up to preference. I mean, yeah, no problem. It's just really up to preference. If you feel confident, then do it. If not, then just leave the one without a time limit aside. That one can just sit idle for as long. I think you have to trade it like every 30 days, but you're gonna take at least one trade on that account. From now until then. Yeah, no problem, Paul. Okay, so Java said, so when you get the order filled on TradingView, just manually enter on your MT4 with the preset TP stop loss with the FTMO trade manager. I mean, that's all I do, Java. So like, for example, but yeah, that's literally what I do. So let me show you what I do. So there's no entry right here, but I'm just going to show you an example of like how I would enter the trade. Okay, so let's just go back to here. So I know there's an entry right here. So I've got the 90 mark right there, right? So basically your entry would have been right here. What I do is when this order sets up, what I'll do is I'll have my pending order right here, my buy limit on TradingView set up. This is for my top step. And then as soon as I hear that order filled sound, I just hit buy on my FTMO quick trade manager. So for example, price is coming, it's right there. It triggers it. As soon as it triggers it right there and it says order filled, I already hit buy on my FTMO. I got my finger ready on the buy button. So as soon as it says order filled, I'm in the position and then I just let it play through. So at that point, I get my full TP on my top step right here or TradingView, and then I also get my full TP on my MT4. The downside to this is that sometimes like your order will get filled late on MT4 because they factor in spread. Their spread is like kind of wide sometimes on like FTMO or MFF, and specifically MFF. FTMO is pretty cool with it, but MFF is, I think that's why I keep getting like crappy fills, right? Because like my fills over here, like they're a little off, but they're not off by a lot. So like, let me see. You can't really see the timestamp here, but I mean, you can see the pricing difference is a little off, right? So like my entry over here, I got in at 34,798, and then over here I got in at 34,799. So I got off, but I got in by like maybe a point difference. So that's why my profits were a little different. Um, so yeah, I mean that's basically what I do, Java. I wait for the order to, I wait for that order filled sign or sound, and then I hit buy on my FTMO quick trade manager with my TP stop loss set. It just gets messy when you have to close out of the position early because you have to be watching both. But for the most part, you usually don't have to close out early anyway. So it's pretty simple and straightforward. Let's see, Dan's asking, hey, Sean, did you ever try MT4 C Trader with FTMO? I was wondering if they might be better than MT4. I don't think it makes a difference, Dan. C Trader might make a difference, but MT4 and MT5 are the same thing. They're the same platform, so it doesn't really make a difference between MetaTrader. C Trader, I haven't used before, but I've heard from other people that they like it more. So I can't say because I've never used C Trader, but the difference between MT4 and MT5, I think there's no difference with them. I already know how to use MT4, so I don't think I'll ever make the port to MT5 unless I have to. But I mean, MT4 is fine. I have no problems with MT4. It's just like it won't make a difference if you're using C Trader, MT5, or MT4. You're still going to have the spread problem, and you're still going to have the execution problem. So it's not really going to make a huge difference. But you know, it's just up to preference because you're going to be doing the same thing either way. Like if I was to use MT5, I would still use the same quick trade manager, and execution would be the same. It's just getting in, and it's just the platform looks different, but execution is going to be about the same. All right, so if there's any other questions, guys, feel free to put them in the chat. We've been on this mentoring session for about an hour. I'm willing to stay on here if you guys have any other questions, but if there's no other questions, then we're just gonna wrap it up. Again, for next week, guys, we have another request to have this on a Tuesday, so we're gonna push it back to Tuesday for next week as well. You know, just a reminder, if you guys are here on the YouTube, just make sure that you guys are subscribed and have your notifications turned on for the YouTube channel, because throughout the week, I'll just list the live session as unlisted. So if you guys are already part of the group, you guys will have access to it, but I just don't want to have this open to like the general public. So we'll have the public live streams on Wednesday. That's going to be the one day out of the week that we'll have it on YouTube. But every other day is going to be unlisted, and then it'll be made public after the live session is done. So just a heads up, guys. Dan said, okay, thanks. Might want to try MT5 on a demo. Yeah, you can try it out, Dan, and see if it works better for you. I've never used MT5 before, but I'm pretty sure it's pretty much the same thing. I just heard that MT5 is just the functionality is a little better with regard to the tools and stuff, because they just updated, you know, the interface. But the thing is, I don't really use the tools on MT5 to begin with, or MT4. I just use the quick trade manager. Let's see, Java is asking, why is price different from YM to US30? Because they're different assets at Java. So YM is the actual asset. So if you're trading futures, YM is the actual asset. So US30 is just a copy of YM. YM is like the actual future. US30 is an indice that mirrors YM. So that's why price is different, because brokers can set their own price. So like, say, for example, you open your own broker, Java. If you want price to be off by like 100 points, you can make it off 100 points because you set the rules, right? So each broker will set their own price too. If you're using a YM, this is from the exchange. You can see over here. If you look on top, it'll tell you where the data is coming from. You can see right here, it says CBOT, which is Chicago Board of Trade. This is the actual exchange. If we type in US30, You've got Black Bull, you've got capital.com, you have ACAP. Everybody is their own company, so they can set whatever price they want. They can set their own spread, they can set their own price. If you're trading YM, this isn't a broker, this is directly from the exchange. So you're going to be getting this data from the exchange. That's why you have to pay for it. And then also, you're getting like the raw price. So you're not getting any manipulated price. This is directly from the exchange. The spread's usually like 0 or 1. It's like directly, there's like little to no spread. But if you trade with any of these other brokers, you know, they can set their own spread. If they want spread to be 100 pips, they'll set it to 100 pips. If they want spread to be 300 pips, they can set it 300 pips. Everybody can set their own price, their own spread, their own execution, their own whatever they want. And that's why they're different. So if you go to futures here, you'll see that all of these are from the exchange, right? So you can see over here, CME, Chicago Mercantile Exchange, that's the actual exchange. So if you want to trade S&P, you do ES, this is the future, you get it directly from the exchange. NQ, NASDAQ, it's not NAS 100, it's NASDAQ 100 through CME. So like this is going to be, you scroll over here and it's the same thing, CME group. So if you go over here to like whatever you're looking at or whatever we're talking about, US 30, you go to Black Bull, that's their own market. They can set it to whatever they want. So that's why price is different. And that's why I prefer to trade on YM, because I don't get ripped off on here. I get in when I'm supposed to, I get out when I'm supposed to. There's no like crazy spread, there's no execution issues. When price hits my price point that I'm aiming for, it pulls me out. I don't have to worry about getting caught in the spread or being trapped in a position when it should have closed out. So that's why I prefer it. But you know, everyone's different. Like if you want to trade on like specific broker, like for example, if you want to trade US 30 and you're using one of these brokers, you want to trade directly on TradingView, then you have to use that broker, right? You can't just use YM. But I like using the raw data for YM because then I know exactly where price is going and it's not really manipulated with regard to the broker. All right, one question from Bloom. Bloom's asking if I can review the V1 strategy that we took on live today. Sure. So the entry that we took today on live was like earlier this morning at like, I think it was this one right here, right? Or where was it? Might have been this one. It was like 647. It was like where price was kind of consolidating a bit. I'll just show you an example right here. Actually, it was this one right here. I just remembered because we have to have a retracement signal. Okay, so let me put up the V1 variation over here. All right, so first you want to confirm the overall bias. If you remember from this morning, Paul, the overall bias was bullish, right? We had a bullish retail sentiment, we had bullish fundamentals, we had bullish short-term technicals and bullish long-term technicals. Everything was bullish, right? The reason why I know that is because we took a screenshot of that over here, and you can see everything was bullish, right? Retail sentiment was 72% short, fundamental bias was 32 points in the green, bullish, short-term technicals are bullish, long-term technicals are bullish. Overall direction of bias is bullish, right? So with that said, we're just going to assume that it was bullish. Second, you want to confirm a high-low using the high-low indicator. So I'll turn on the high-low indicator right here. You can see right there, we have a higher low with that tab right below it. Next, you want to confirm that the candle following the high low is a double wick or a double body. So there's two things that you could look for. You want to either see that these two candles are on the same level with regard to body, or you want to see that they're on the same level with regard to wick. With this candle right here, you can see that they're both double body. And once you confirm that, you can move on to the next step. So let's go back to step one, confirm overall bias. Overall bias was bullish today. Second step, confirm a high low. There's a high low right there. Third, confirm that the following candle is a double wick or double body. It's a double body right there. Step 4, you want to confirm that there's a pending momentum in the direction of the trade. So right here, we're looking for a buy, right? Since we're looking for a buy, we want to make sure that there's no buy signal up yet. We want to look for a pending momentum, meaning that there's a sell signal right here, confirming that there's a retracement, and the next signal is going to be a buy signal, right? So that's what we mean by pending signal. So if you're looking for a buy, you want to see that the most recent signal is a sell signal, which we have right here. Once you've confirmed that, you can enter on the open of the following candle, which should be right here. So as soon as this candle closes, you enter for a buy position. You set your TP stop loss to 100, 300. Got everything set up right there. Let the trade run. goes back and forth for a bit, and then it hits TP right there eventually. So if you guys remember from this entry earlier today, I actually didn't get closed out right here because MT4 screwed me over. Well, not MT4, FTMO. The spread was kind of wide, so it didn't fill my order. Then I was stuck in this position for a little bit because the thing is, it had to cover the spread first before it could give me profit. So technically, spread was about like, I think 2 points. So this is actually where price needed to be to close me out on FTMO. So price came up, but it didn't close me out. So I was actually stuck in this position for a long time over like way down here. This is why I like YM, because when I trade on here, if it gets to that point, it actually closes me out. I'm like out of the position. If I'm on FTMO or whatever MT4 broker that you're using, you got to cover the spread. And the spread right here is kind of wide, right? It's like an extra 2 points. So this here is an example of like what we took today. If you need to see another example, Paul, let me know. But this is pretty much the one that we took this morning, where I held on to it for a while and then ended up, I did hit profit, but I ended up pulling out right here. And that's why my profit here was cut short. So I was supposed to make 2,000 on that trade. I made 1,100. So I basically cut out halfway because I had to cover the spread still. So I exited right here at the halfway mark. I could have held on to it, but at this point, I was already stressed out and I didn't want to risk it. So I could have waited like 2 more minutes and it would have went through. But I was better off cutting out with some profit rather than holding on to it. Yeah, Paul said he ended up pulling out early for a partial, but realized he could continue to hold it. Yeah, exactly. You could have continued to hold it, but it just depends on your feeling. If you feel like scared about the position, you feel nervous, just pull out for a profit, right? It's better to get some profit than to get a loss, or than to just feel bad about the position. Because like sometimes this thing will go into drawdown and your heart will just go through your stomach, right? You're just like, man, I should have pulled out of this position. Like, for example, when it hit TP right here, I was kind of regretting it because I was already in profit 1,700, but I just held on to it. And I was like, damn, now I'm negative 7,700. I should have just pulled out. So as soon as it pulled back up over here and it kept moving kind of weird, like, it was moving kind of funny over here. I was already in profit like 1,700 again right here. And I was like, okay, I'm not going to risk it. Like, I'm not going to risk losing the trade just for an extra 300 bucks, right? I'm not going to get greedy right there. I'm just going to pull out for profit. And that's why I pulled out. Unfortunately, as soon as I pulled out, price pulled back. And then I got hit with some slippage right there. Because when I clicked out of it, you can see right here, my other account got out at 1,500. I should have been out at 1,700, but it is what it is. And the market execution sucks when it comes to certain brokers. But it happens. It's like something that you don't have control over. Yeah, exactly. And Paul also mentioned it also works perfectly with the momentum pullback in conjunction too. Yeah. So that's why I was okay with taking the entry here for the V1 variation. I typically don't take the V1s anymore, but the reason why I took it was because it lined up with the momentum pullback, also lined up with the 1 hour entry. It just lined up with a lot of things, right? There was a lot of things that it was lining up with, and I was just okay with taking it. But typically, this was more of a FOMO move on my end, because I didn't even tell you guys to take this trade. I just took it because I felt like it was going to hit, which it did hit, but ended up taking longer than I thought. So, all right, guys, if there's any other questions, feel free to put your questions in the chat. Otherwise, we'll be wrapping this up pretty soon. Anything else? I'm just going to check my messages real quick. See if there's anything else that I'm missing. All right, guys. So I think that's it for today. We've been on this mentoring session for a little over an hour. If there's any other questions that you guys have, feel free to message me on Telegram or send me an email, Sean@Kodi5trades.com. Otherwise, we covered a lot of stuff today. So I think this was a pretty good session in review of the momentum pullback scalp strategy, also the V1 variation right here for Paul. But yeah, I mean, if there's any other questions, guys, feel free to reach out. Tomorrow's going to be, let's see, there's a lot of news coming up tomorrow. So I think tomorrow should be a pretty decent trading day. We have pre-market news, housing starts, building permits. This is going to be positive in my opinion. I think this is going to be positive because I did see news earlier this week indicating that the building has started up again. It's just people don't have enough. People are having issues getting mortgages for the new building. So people aren't buying the buildings, but they are building. And then crude oil inventories on top of that. So, all right, guys, other than that, I will see you guys back here tomorrow. If you guys have questions, reach out. Otherwise,